Now, amid the worst inflation in 40 years, the Federal Reserve on Wednesday raised its benchmark interest rate by 75 basis points for a third straight time. Fed Chairman Jerome Powell said the FOMC is strongly resolved to taming inflation, although concerns remain over the impact of hawkish policy, with fears of a slowing economy and looming recession. Shin Se-byuck has the latest.
The Federal Reserve went ahead with its third straight interest rate increase of 0.75 of a percentage point on Wednesday. Along with the rate increases, Fed Chair Jerome Powell even hinted that further hikes are likely high, with at least one more move of that size this year.
The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done.
The Fed's latest quarterly summary of policymaker projection shows U.S. central bankers expect to raise the policy rate, now in the 3 to 3.25% range after Wednesday's 75 basis point increase, to 4.4% by the end of this year and to 4.6% by the end of next year. Despite the Fed's aggressive move, things still look rather grim. Powell, speaking to press after the Fed's policy statement, said there isn't a painless way to resolve the inflation issue, as levels reached the highest level in 4 decades. The chair had already said it would be very challenging to achieve a so-called soft landing for the economy. Meanwhile, wild swings driven by the Fed's latest policy announcement prompted Wall Street's main indexes to fall sharply on Wednesday. The S&P 500 lost 1.7% to slump to its lowest level since mid-July after wavering between gains and losses. The Dow Jones Industrial Average also plunged 522 points to a little under 30,200, marking a 1.7% fall. The Nasdaq Composite lost 1.8%. Pundits say the Fed's overly aggressive rate hikes could heighten the risk of recession. Shin Se-byuck, Arirang News.